York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech leading stock futures higher. The AI trade set for a test once again this week with SK Hynix's US listing later. World leaders head to Turkey for a NATO summit as Russia carries out a massive air attack on Ukraine. And oil drops as flows through the Strait of Hormuz return after some weekend U-turns and OPEC's supply signal. Well, let's get a check on the markets around the world now. After this long weekend in the United States, what's been happening, Winnie Sue, in Hong Kong?
Good morning, Bonnie. We are seeing Japanese yen extending its weakness past that 162 level against the dollar as investors tend more bearish on the currency, with Goldman Sachs even slashing its one-year forecast to 165 against the dollar versus earlier 155, citing the fiscal concerns, the expectation for the Bank of Japan to raise rates gradually, and also the Treasury yields to stay higher for longer. Now, those fiscal concerns also weighing on the bonds, with the 10-year yield hitting its highest level since 1996. Now you flip forward and take a look at the equity space. We have the MSCI Asia fluctuating while the Kospi here down 0.5%. A bit of a wait-and-see mood ahead of the preliminary earnings from Samsung Electronics due tomorrow, as investors will be assessing the durability of the AI rally. But the good news here is that the won finally started its first day of its 24-hour trading.
Right. Good luck to everybody trading the won today, I guess. Winnie, thank you. Winnie Sue there in Hong Kong. Now to London for a look at the European session so far with Justina Lee. Justina.
Good morning, Vani. Now we see here stocks Europe 600 pairing some of the gains earlier today after a few strong weeks. Now we're seeing a little bit more strength in UK stocks, both in the international FTSE 100 and the more domestic FTSE 250 led by EasyJet. And when it comes to German two-year bond yields, they're falling a little bit with oil still drifting lower, which should be a good backdrop for European stocks as we head into the earnings season. But when we flip the board here, one thing that's really surprised me here is that we've talked a lot about the political instability in the UK. But actually, if we look at the euro-pound cross rate, the pound has actually been strengthening, the euro depreciating against the pound here. And that, I think, kind of reflects the fact that, Andy Burnham hasn't really said that much to degrade UK government finances. And of course, with a lot of that inbound M&A into the UK, such as the EasyJet bid, that's also boosting the pound as well. So that's been a bit of a surprise here, Bonnie.
Well, you have to wonder if anybody's going to be in the office today, Justina, after what just happened a couple of hours ago to England, right? Justina Lee there in London. Here in the United States, we're shaping up for a pretty positive start to the week after the Friday jobs report came out on Thursday, and then we ended up having a flat session on the S&P 500, but a very down session for the Nasdaq 100. It was down 1.6% on Thursday, with the SOX down almost 5.5% again for a huge jolt. The AI story will take another turn this week with the SK Hynix IPO at the end of the week, and of course a lot in between then, including Samsung earnings. So for now, we look to be pointed higher across the board, particularly in the tech complex. If we take a look at yields, we'll be hearing from Fed Governor Waller a little bit later on. We see that we have yields down across the board by about 2 basis points, but still pretty elevated, with the 2-year past 4.11 and the 30-year just coming back off that 5% mark. Of course, Brent crude playing into the story too. As you can see, lower once again today. It can't go too much lower. We're already at levels that we were at before the war started. All right, let's get to some individual movers now this Monday morning, and across to London once again, and Chloe Melly.
Good morning, Bonnie. So we are back from this holiday weekend, and tech is very much in the green. We are seeing the likes of Nvidia up slightly, but then Intel and SanDisk actually up very strongly this morning. This is going to be a very key sector to watch throughout this week as we await for those Samsung and SK Hynix earnings. That's going to really tell us a lot about the durability of this AI rally and the sustainability of AI spending as well. So definitely one to watch as well throughout the week. Moving on to London, where EasyJet shares are up this morning after finally accepting this takeover offer from Castle Lake. So they have accepted the 5th takeover proposal from that US investment firm. This is a takeover offer of more than £5 billion. And so we are seeing that drive the shares ahead of more than 10% this morning. And finally, Italy. In Italy, we've got Leonardo up because Italy is set to raise defense spending by 17 billion euros. This is an expected move as it moves towards that 5% spending target bit from NATO, but this is, regardless, very good news for Leonardo, and so we're up about 4% for that defense company.
All right, a lot of defense news this week. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we'll take a look at market breadth and what's happening there with Anneka Treon of ING. U.S. futures then pointing to a rebound after the long weekend, with tech leading the way. That's as SK Hynix is set to list on the U.S. stock exchanges later this week. The chip giant's estimated ADR size has been reduced from 29 billion to, well, 28 billion, according to a regulatory filing. Let's get more with Bloomberg Tech Europe host Tom McKenzie. Essentially, this is a portion of the company, Tom, a percentage. How do we get to that figure?
Yeah, so this is an ADR. It would be one of the biggest foreign listed secondary listings in the US on Friday. That is expected, as you say, between 28 and 29 billion US dollars. Some of that money, it seems, there's a hope, at least in South Korea, will be repatriated. That ties into the currency story that you were touching on earlier in the show. And so that is one of the key catalysts, is SK Hynix looking to raise that capital in the US markets this week. We're also going to get those Samsung earnings, as Chloe was saying as well, on Tuesday. When it comes to the SK Hynix story, there's an opportunity here, arguably, to try to close the valuation gap with one of its biggest rivals, which is Micron, which has historically been valued and continues to be valued at a higher premium to SK Hynix, even though SK Hynix is really the leader in that sector when it comes to particularly high bandwidth memory. It's also looking to tap into the retail base of investors in the US as well. So we'll see how that is received at the end of the week. The other big catalyst then in this major week for the test of the chip trade is the Samsung earnings, and you're expected to see potentially profits of around $55 billion. That is the forecast. That would be 18 times what we saw in the same quarter last year. So both Samsung and SK Hynix in the spotlight. When we're seeing, as you say, and the Nasdaq futures are pointing higher, but that's part of the catch-up, isn't it, after the drop of about 1.6% on the Nasdaq 100 on Thursday. So part of this is a catch-up trade, but also looking ahead to what could be the catalysts around Samsung and whether or not they can confirm that demand picture particularly for the memory space and AI as a driver.
Yeah, and you have to wonder what the rationale would be for a new memory trade, right? But I guess the market may just find one. How concerned should we be about this NVIDIA story that its next-gen AI server rack systems are going to be delayed by more than a year because of manufacturing difficulties?
Well, it hit a lot of the stock, hit a lot of the suppliers, the Asian suppliers to NVIDIA in the Asian session, but the futures picture doesn't look like it's holding NVIDIA back too much. It's underperforming on the futures picture versus some of its counterparts in the US, but nonetheless in positive territory. But it is a concern. This is a report from Semi-Analysis, a research firm, suggesting that one of its newest rack systems has been delayed by at least 12 months. And so it suggests that maybe as they look to push out the Rubin, the latest chipset, using this rack system to get to their end customers, that maybe that is going to be a portion of concern. It's not about a demand story, it's about whether or not they can really deliver on some very ambitious targets in terms of getting this infrastructure into the hands of their customers. And again, according to this report, it could be delayed by as much as a little over 1 year. And it certainly had a hit in terms of the suppliers that supply into and feed into NVIDIA in the Asian session. Yeah,
we'll monitor those stocks and see do they bounce back in future sessions. Tom, thank you. That is Bloomberg Tech Europe and Opening Trade host Tom McKenzie. Crude lower this morning then as traffic picks back up on the Strait of Hormuz after some unexplained U-turns by tankers over the weekend. This as OPEC Plus agrees to add another 180,000 barrels of oil per day to their daily quota. Bloomberg Horizons anchor Abir Abu Omar joins me now from Dubai. First on these U-turns, Abir, what happened? Was there a threat to safety?
Good morning, Vonnie. We don't know, actually. The reason behind those U-turns is not really identified as of last week. But what we know is that Iran had laid out a specific route for ships that are starting to make their way through the Strait of Hormuz to go through. And any ship that doesn't stick to those routes is prone to those attacks. We saw an attack happening last week that was reported to a ship that did not stick to the borders that Iran had laid out. And so we're keeping an eye on those ships and tankers that are making their way through. And if you remember, Iran is quite quite adamant in its concessions in this MOU that was signed about 3 weeks ago, that it wants ships to stick to those routes that it laid out, that it wants ships to agree that once the 60-day negotiation period between it and the United States is over, that those ships will have to come to those concessions of paying tolls. And so Iran is being quite vehement about what exactly the routes those ships are taking. We're seeing movement carry on the Strait of Hormuz. That's worthy of, that's something to note here, Vonnie. Now, the average of those ships, we're seeing 20, 30 ships passing every single day with or without the lights on, as we've been saying. Now, that's a far cry from the levels that we used to see pre-war, but it's something to note. It's something to point out. But again, it's just the movement as it carries on, and as those oil tankers start to make their way to their buyers, just something they have to tread with caution is how they pass through the Strait of Hormuz and sticking to those borders that Iran had laid out. So perhaps a completely different paradigm to how things will be going forward after this MOU is signed and after after the permanent deal comes through in about a couple of months or so.
Abir, what is happening in the Red Sea? A little concerning that we're seeing a pickup in attacks, or reported attacks at least. Is this the Yemeni Houthis?
Yeah, so this is an attack that was reported late last night. It was about 60 kilometers southwest of the Hodeidah port that's in Yemen. And Vonnie, you mentioned the Houthis, and the Houthis did threaten during the war that they have issued a ban on all Israeli flagged ships. So while we don't know the exact specifics of this attack that has happened, it poses yet another challenge to ships that are trying to make their ways through routes other than the Strait of Hormuz. The Red Sea has become pretty popular for the Saudis, who have diverted traffic away from the Strait of Hormuz throughout the conflict because they've been doubling down on their investments in the Red Sea, and that's really helped them and helped their exports through the wartime. And that is not something that other countries are not doing in the region. The UAE, for example, a neighboring country, a big oil exporter that's exited OPEC last month, has been doubling down on its northern ports. And so we're starting to ask ourselves these questions about just how much of a challenge or how problematic it will be to start diverting tankers and ships through these other shipment routes, because the Strait of Hormuz has had its fair share of problems over the past 3-4 months, Vonnie. And so if these problems start to occur in other shipping routes, then we start to ask ourselves about the prospects of an oil supply glut, or those barrels, those much needed barrels, making their way through to the rest of the world.
Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. President Trump headed to Turkey for that NATO summit kicking off on Wednesday. He'll be there tomorrow. The president expecting to meet his Ukrainian counterpart, Volodymyr Zelenskyy. Bloomberg's Piotr Slomowski is in Ankara. Piotr, we know vaguely what President Trump would like to say to other NATO members, what kinds of messages he'd like to get across. But what would be considered a success for NATO itself, for the member countries?
Yeah, so for the Europeans, obviously they're waiting for Trump to come here, and they're fully prepared for the message that will basically say you need to spend more on defense, and Europeans are ready for that. NATO Secretary General Mark Rutte has been trying to prepare for that summit. You know, he was in the White House just last month, presenting these big charts, talking about Trump trillions, sort of suggesting that obviously thanks to Donald Trump, Europeans have really ramped up the defense spending. But obviously we also saw that it's very clear from the pronouncement that we're getting from the US administration that they're definitely pulling out troops from Europe. There's a review going on. Part of it, as Pete Hegseth presented it to Europeans, was displeasure that the U.S. administration had with Europeans for not participating or helping with the war in Iran. So they're probably going to hear that message as well. But they are coming into this meeting also showing to Trump that they're really ramping up, and they are going to come up with deals. So tomorrow there is an industry forum, the first time that's ever happened in the summit, where there's going to be, where Europeans are going to sign a number of big deals on defense, just to show Trump, you know, we pledged, or we committed to 5%, or spending 5% on defense in the coming years, and we are delivering. Whether Trump Whether that sinks in, whether Trump is actually going to be receptive is a matter we're going to find out quite soon as he arrives tomorrow.
Now, this all happens as Russia continues to strike Kyiv, in fact, killing 11 just on the eve of the NATO summit itself, Piotr.
Yes, indeed. So we continue to see strikes on both sides, as a matter of fact. So Ukrainians have been very successful in hitting deep into Russian territory, disrupting oil supplies, for example, destroying a lot of refineries. So it seems like Ukraine has an upper hand in that sense. On the other hand, however, we're also seeing, as you mentioned, another strike, a second one in less than a week, where Russia attacks Kiev, and the death toll has risen to 11 people, and this basically shows Ukraine needs Patriot missiles, and only the US can provide them, and other allies as well. So that's the problem. That's something that Ukraine wants to get out of this summit as well.
All right, Piotr, thank you so much for giving us an opener there. That's Piotr Skolimowski in Ankara. Now to other top stories trending on the terminal this morning. A former Japanese top foreign exchange official says the yen is undervalued by up to 20%. Tatsuo Yamasaki, who served as vice finance minister for international affairs, told Bloomberg the yen should be valued at around 130 per dollar. Yamasaki downplayed concerns that current economic and fiscal policies point to a worsening fiscal position. Thales is buying Exail Technologies, beating rival Safran in the race to acquire the French maritime robotics company. Thales will pay €134 a share, valuing Exail at €3.9 billion, including debt. The deal expands Thales' submarine drone business as demand for demining systems rises after the Strait of Hormuz closures. FIFA allowing US star Volodymyr Balogun to play in the team's knockout match against Belgium tonight. This follows a personal appeal by President Donald Trump, sparking uproar from competing teams. Balogun got a red card for a foul against a Bosnia-Herzegovina defender. FIFA stated that Balogun will instead be placed on probation for a year, but will be able to play during that time. Coming up, EasyJet shares pop after Castle Lake's near $7 billion offer. Details next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of EasyJet getting a boost this morning. The British budget carrier trading at its highest since 2022 after agreeing to Castle Lake's fifth bid to take over the airliner. The offer would give the airline an equity value of $6.9 billion. Bloomberg aviation reporter Danny Lee has the details. So what was it about this fifth offer, Danny, that struck the right chord?
Well, Vonnie, good morning. It really does take two to tango, and this fifth offer after several weeks of trying was high enough for EasyJet's management team to give, at least in principle, Castle Lake the green light to do its due diligence and extend this put-up or shot-up offer up until August 3rd. So there is now time for Castle Lake to go through EasyJet's books and now have a better assessment of what it could potentially be buying into. Though analysts and investors had been looking at something more like 700 pence a share, it's still a significant advance in fact that the fact that Castle Lake will be able to now proceed accordingly with its approach for EasyJet. Clearly, it's been quite attractive given the kind of valuations for airlines being hit by higher oil prices and the Iran war. But yeah, this is the fact that EasyJet had previously knocked back bids, calling Castle Lake's bid previously highly opportunistic.
Well, aren't all bids. Danny, what will be the challenge here? I mean, there's more than 15% of the company. The biggest shareholder is the family of the founder, Stelios Hagiionou.
Yeah, I think the key question remains whether certain key investors and shareholders of EasyJet will be won over by this indicative 690 pence share offer from Castle Lake. The fact that the founder, Stelios, and his family own roughly 15% of the company. He's said nothing so far of Castle Lake's overtures, whether they'll be holding out for something much higher or higher still with regards to Castle Lake's approach. Still, Castle Lake could fall foul of potentially competition regulators in Europe and the UK, and also the structure of the deal. The fact it's a US entity, it does need partners from Europe and the UK, potentially airlines who can help come aboard to solidify its bid from the continent. So it does remain to be seen who does get on board with Castle Lake, and the fact that the competition regulators will be watching very closely as the fate of EasyJet as a standalone entity does, there are many questions of whether it can survive or whether it may be broken up ultimately, as the sum of it is much more valuable as its whole.
Yeah, absolutely. A lot of assets, a fleet of 356 Airbus A320s, for example. Danny, thank you so much. Bloomberg aviation reporter Danny Lee. Coming up, a look at what's making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the Wall Street Journal reporting on power dynamics at play as countries restock oil coffers. The Journal saying the amount of oil storage around the world playing a central role in US-Iran power dynamics. Next up, the Washington Post on a massive marine heat wave across the Pacific Ocean, covering an area more than 8 times the size of the contiguous United States. The Post says it could have profound ripple effects for weather events around the globe. And finally, the FT reporting large investors committing billions of dollars to private credit following an exodus of smaller retail clients. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day and the week. Tech leading stock futures higher. The AI trade set for a test once again with SK Hynix's US listing later in the week. World leaders head to Turkey for a NATO summit as Russia carries out a massive air attack on Ukraine. And oil drops as flows through the Strait of Hormuz return after some weekend U-turns. Also, OPEC Plus's supply signal. Let's take a look at those futures then, because we are pointed higher after the S&P ended Thursday flat post the jobs report, and the Nasdaq 100 had a big sell-off with the SOX index down 5.5%. And wouldn't you know it, Mike Wilson out today saying hyperscalers are the new memory. And I think that's been pretty obvious in the last few sessions of trading. We also have Russell 2000 futures pointed higher. That continues to be a story as breadth widens. Let's take a look at yields. We're waiting for Fed speak this week, starting with Governor Waller. Down about 2 basis points across the curve. Nevertheless, we're backing off that 5% mark on the 30-year yield. We also have Brent crude lower today once again, even though we had some U-turns at the weekend and a little bit of activity in the Red Sea concerningly as well. Nevertheless, oil down and potential for a glut. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. Tech is in the green this morning, and this is going to be a really, really key sector to watch going forward. I mean, at least this week, because we've got those Samsung earnings coming out that are really going to set the tone for the next leg, for the next part of this AI rally, because, of course, there's been such a wild ride in that sector over the last few weeks. But in the meantime, as we wait for those earnings, we've got some positivity in that sector. Moving on to EasyJet, which is up very strongly in London this morning after agreeing to the 5th takeover proposal from the US investment firm Castle Lake. This is a takeover offer of more than £5 billion, and this comes after weeks of EasyJet playing quite hard to get. And finally, Leonardo is also up in Italy this morning after Italy is set to raise defense spending by 17 billion euros. This was an expected move given that it needs to meet that NATO target of defense spending. But this is regardless very good news for Leonardo, and we are seeing that driving the shares higher this morning, up about 4% today in Italy.
All right, some nice movers there, Chloe. Thank you so much, Chloe Melly in London. Joining us now is Anneka Treon, Global Head of Private Banking, Wealth Management and Investments for ING. Anneka, great to have you. I love the way you format your note, because you talk about supply being the new trade. And in other words, if you look at the oil market, if you look at the memory chip market, if you look at data centers, every day it seems to be a story now of too much supply or too little supply, and that's what's moving this market. Where should we train our eyes next?
Yeah, look, indeed. I mean, we've experienced our fourth supply shock in 5 years. And this is coming from a very different world of globalization, ample demand, China fueling demand, etc. So we're very much in a supply orientated market. But I think we need to keep our eyes disciplined on earnings, on company earnings, which has actually been what has fueled year to date market performance.
All right, well, we're not getting another earnings quarter, except for some trickling out between now and next quarter's earnings. In the meantime, should we expect the memory trade to continue to sell off and the hyperscaler trade to continue to gain steam?
Yeah, look, I mean, as discussed, so supply is definitely the rhetoric. And I think companies are increasingly struggling. How do they get hold of the supply that they need to continue the innovation and continue the growth? So that will very much be the continued theme we expect, yes.
So what would you be buying then for your clients, or what areas of the market, even if you don't want to talk individual companies, Anneka?
Yeah, I mean, in general, let me take a step back, because we've mentioned 4 supply shocks in 5 years and the general unpredictability, volatility we've seen in markets, also reflecting on what we see in our client base. What we see that increasingly becoming normalized. So in these supply shocks, a COVID set markets -30, a Ukraine war set markets -20, tariffs -15, the latest Iran 10. And what you see is that investors are increasingly focusing on what is fueling share prices, which is actually earnings, as said, and continued flows there. So we see much more discipline, much more resilience, and actually from a European standpoint, we see more nationalism, where investors are actually seeking more and more to expose to Europe, I guess as a diversification, versus an increasing overweight of market drift in the US.
Would you recommend that investors do that? I mean, you're expanding into a vast amount more markets, and I'm curious, where do you see value in the coming months, earnings or no earnings?
Yeah, so what we see, I mean, if you look at our exposure, so we have 80 billion of client invested assets, over 5 million investors across 9 markets, European markets. And what are we seeing? We're seeing that, number one, clients are actually, Europeans are starting more into markets, capital markets, and start investing more, because Europe has had a massive underinvestment versus Americans. So that's number one. Number two, what are they investing in? We see a lot more interest in ETFs in general. If you look at our flows, of our flows, for example, in brokerage ETFs, 6 months ago, that was only 50%. So that's something we see from clients' behavior. If you look at our chief investment office strategy, what do we believe? We neutral weighting to equities. We are neutral to US, Europe. We believe, I mean, talking about the earnings, we believe that this earnings growth is continuing with strength, which justifies where we are in terms of market valuations, etc. So we encourage our clients to just lean in and continue to compound their wealth.
Lean into equities then, Anneka, in Europe or around the world?
Yes, broader and broader.
So just buy equities willy-nilly across the board?
No, absolutely not willy-nilly. So what do we see? So if you look within equities, what are we looking at? We see we've got a neutral rating on US equities, on European equities. We're actually over. It's why? Because we see more earnings growth expected there, especially also relative to valuations. Within the equity space in general, we continue to be constructive on AI, on tech, but not indiscriminately. So we are looking at company-specific situations. We look at equities as companies generating cash flows, and that's how we continue to take a discriminated view on stock selection at the same time as broader constructive on equities.
Just briefly then, Anneka, for diversification beyond equities, what are your clients looking for? What are they asking you about? What are you recommending?
Yes, within fixed income, we're also actually a neutral exposure to fixed income. And there we are underweight sovereigns, we're overweight investment grade. What we see in terms of credit quality, we still think there's opportunities for yield pickup over there. So we remain equally constructive in the fixed income environments.
Okay, amazing. Anneka, thank you so much. Very positive kickoff to this week's trading. Anneka Treon of ING. Now to other top stories trending on the terminal this morning. EasyJet shares jumping after Castleake's latest bid. The budget airline agreed in principle to the US investment firm's takeover offer worth more than £5 billion. The deal would take private an airline that went public in November 2000. US beef exports to China could improve in the second half, even as China's decision to renew import licenses for US meat plants has yet to improve exports. Chinese quotas to other major suppliers are set to dwindle as Australia now faces hefty tariffs and Brazil is close to using up its allowance. FIFA allows US star Volodymyr Balogun to play in the team's knockout match against Belgium later today. This follows a personal appeal by President Donald Trump, sparking uproar from competing teams. Balogun got a red card for a foul against a Bosnia and Herzegovina defender. FIFA says that Balogun will instead be placed on probation, although he'll be able to play for a year. Coming up, President Trump set to meet with President Zelenskyy at the upcoming NATO summit as Russia carries out massive airstrikes on Ukraine. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Cohen in New York. President Trump will be headed to Ankara, Turkey for a NATO summit scheduled to begin Tuesday. For more, Bloomberg's Kasia Klimashinska joins us now in Washington. Kasia, the president has been pretty vocal about lashing out against NATO members for not helping with the Strait of Hormuz, for not upping their defense budgets and so on. What will be his main message this time round?
Indeed, President Trump is heading to Ankara on Tuesday for the NATO summit that will happen on Wednesday. From his Truth Social posts, we know that he's clearly not in a good mood. He's very critical of his NATO allies. As you said, he thinks that NATO is not doing enough to support, to help the U.S. He cites the example of the war in Iran, where some of those allies didn't allow the U.S. to use its military bases early during the attack on Iran. And then Trump says that those allies didn't help reopen the Strait of Hormuz. But he will face a difficult situation in Ukraine when Russia launched a significant attack just overnight, killing 11 people in the capital of Ukraine. We know that Trump will meet with his Ukrainian counterpart, Volodymyr Zelenskyy, on Wednesday.
Yeah, we'll be watching to see what headlines come out throughout the week. Now, domestically, the New York Times reporting the administration is rolling back dozens of gun regulations. What does it mean for the various states? Kasia, will guns be, more easily buyable, more easily usable?
This is a very significant move that the New York Times is reporting. The Trump administration rolling back more than 3 different regulations that will allow basically more guns to circulate here in the U.S. A lot of those measures have been imposed relatively recently during the Biden era, where Biden was trying to react to several mass shootings here in the nation. So what will happen now is that basically this safety, this crime that Trump has been saying that he's trying to reduce could in fact increase as more guns will go, for example, to hands of people that have some mental health issues. But it's not surprising. Trump has been campaigning as a champion of gun rights. He has been also very favorable to this industry during his first term.
All right, Kasia, what else should we be looking out for from D.C. this week? Obviously, it's post-4th of July. The House went on a long recess and so on.
President Trump will be talking about his Trump accounts today in the morning, so we might hear more about what he's focused on domestically here. He has been praising the gains in the stock market, addressing the increase in wealth that he himself has enjoyed last year, but praising the stock markets, praising several companies. We know that he is looking at tech companies, for example, in encouraging them to make donations into the Trump accounts that he's promoting for young Americans. Perhaps the midterms are very much on his mind, the affordability. He has been talking a lot about the decrease in gasoline prices because we have oil flowing again through the Strait of Hormuz, for example.
Yeah, I noticed a bunch of companies last week saying they were going to match employees' donations or donate into those Trump accounts. Kasia, thank you so much. Bloomberg Government's Kasia Klimashinska. Stock futures higher than this Monday in a rebound after the long weekend. Tech leads the way as investors await SK Hynix's US listing later this week. The chip giant coming to market with maybe around $28–29 billion in terms of an ADR filing. Let's get more with Bloomberg's Matt Bloxham. So Matt, what is the rationale for yet another memory trade? It feels like we might have hit peak, but maybe not?
Yeah, I mean, so the $28–29 billion in the context of SK Hynix trillion-dollar plus market cap's pretty small, but I think the important thing here is that it provides a more direct, more liquid way for US investors to trade the Taiwanese listed company. You know, so far they've not had that direct access. So there are some companies and fund managers in the US that haven't been able to trade it at all. In other companies, there's just quite a bit of arbitrage and friction there in the current ways you can buy it. So I think it opens broader access to the US investor base for SK Hynix. Obviously, even though there's been a bit of a pullback recently, the memory chip companies are on a bit of a tear this year. And I think this hopefully will help to kind of narrow the valuation discount that SK Hynix has been trading at relative to its US peer Micron. So yeah, I think that's the kind of main motivation behind this trade.
Now, NVIDIA's next-gen AI server rack system is going to be experiencing delays. Obviously, some suppliers, some clients in Asia sold off massively on this news. How concerned should the US investor be?
Yeah, I mean, I think it's definitely something that will attract some scrutiny from the current shareholders. So this Kyber rack system is designed to house the kind of the Vera Rubin chips, you know, the kind of most advanced AI accelerator chips. And yeah, so I think this is an important part of the NVIDIA development cycle. You know, they're kind of anticipated to be kind of upgrading technology on a kind of yearly cycle. So this particular kind of cage and frame and rack system would really allow the next generation performance boost for NVIDIA-based chips. So I think one of the question marks people are going to have here is, does this create, even if it's a small gap in the market, does it create a gap in the market for the likes of AMD and Google, who also have their own AI accelerator chip development plans? Does it give them an opportunity to kind of close some of the gap that NVIDIA has? But you know, clearly NVIDIA is going to be working incredibly hard to kind of find solutions to this, although this current proposal has kind of hit some technical issues. I'm sure they're working incredibly hard to kind of figure out a solution to those problems, or an alternative way of delivering this capability to their customers in a way that works.
Yeah, you'd have to imagine that all hands are on that deck right now. Meanwhile, its server assembly partner, Honhai, had a great session. It reported a 40% jump in quarterly sales, said there was going to be massive growing AI demand. How can the two be true, Matt, that server assembly is a problem for NVIDIA but not for its partner?
Yeah, it's a good question. Obviously, a lot of people will know Honhai more as Foxconn, which is the lead assembler for Apple products. But you know, right now the real momentum for them is in assembling AI products. NVIDIA is a really big customer of theirs. And you know, I think whereas this kind of news about a delay to the kind of Kyber rack system for NVIDIA is about the kind of 12-month plus kind of pipeline. Obviously, what they're benefiting from right now is the kind of the runaway demand for the existing technology that NVIDIA is selling. So I think that's the kind of how to kind of square that circle, if you like. So obviously, potentially, if these NVIDIA issues with Kyber do persist, that may have some knock-on effects to Foxconn eventually. But yeah, as we talked about, probably there are solutions on the way. NVIDIA isn't Foxconn's only customer. They're very diversified, and I'm sure there's plenty of other ways that they can kind of balance that out over time.
All right, Matt, thank you so much. A font of information this Monday morning. Matt Bloxham there of Bloomberg Intelligence. Staying with stocks now, Bloomberg Intelligence also out with a list of 10 companies to watch in the third quarter, ranging from hyperscalers to chocolatiers and toy makers. Sometimes for good reasons, sometimes for maybe not so good reasons. Bloomberg Intelligence Global Chief Content Officer Tim Craighead is with us for more. Let's begin with, say, Microsoft, Tim. How should we view Microsoft given the competing narratives in the market for that company?
Yeah, it's really interesting, Vani, and I will give a little bit of broader context. These 10 companies are part of our broader list of focus ideas, and there are about 160 of these. And as you've noted, some are positive, some are cautious. They're high conviction fundamentally oriented views, and that's what focus ideas are all about. These 10 have catalysts ahead in the third quarter that make them particularly topical and timely right now. Microsoft, as you've said, there's different views. The market seems to be saying they're a software company that's going to be disrupted by AI. But if you take a step back, they have one of the biggest cloud platforms that the LLMs are using. And they've got a new Microsoft 360 Office suite that's coming out in the second half. We think revenue is set to surprise.
Fascinating. Yeah, there's some hedge fund managers out there that would agree with you, I imagine. Tim, talk to us a little bit about LLMs. They haven't made the cut here. I guess some of them aren't public, so there wouldn't be anything, quarterly-wise to say about them. But what AI kinds of trades have made the cut this year?
Yeah, it's interesting because, we're always looking for sort of the second or third derivative, if you will, of the ongoing AI idea. And that takes us to two other names beyond Microsoft. One is a UK company called Halma. It's health and safety equipment, falls in the industrial category. But they have a business that produces something called photonics. That's used by hyperscalers in their data centers to replace copper. It's a critical component, and we think that will be driving Halma's revenues higher than expected. On the other side of the world, Telecom Malaysia is also very much an AI play. Singapore has been the data center hub for much of Asia. They're running out of space, frankly, to build data centers. A lot of that build is now happening in Malaysia, and Telecom Malaysia is the digital infrastructure provider. So again, it's a sort of second derivative play, but one that makes a lot of sense.
I have to ask you about weather, because we keep hearing that there's an El Nino on the way. There's going to be very, very difficult weather due to a vast quantity of externalities and not just an El Nino pattern, right? And that is not good for cocoa providers, possibly not for chocolate companies too. Where are your focus ideas focused on there?
Yeah, Barry Callebaut is a European company. They sell cocoa to chocolatiers, chocolate makers. And there's a couple of dynamics going on there. One, El Nino, if it is as bad as is now being feared, could dampen supply, raise costs for Barry Callebaut. They also, in general, chocolate makers are using less cocoa in their formulations following all the spikes that we've had in chocolate prices recently. And we think that there's also a negative volume story relative to expectations. So they're potentially stuck in the middle on both sides.
Yeah, that really terrified me when I realized that people like Nestle and so on were changing the amount of cocoa in their chocolate, and probably we weren't even noticing. Tim, thank you so much. They're fascinating reads, all these high confidence focus ideas for Q3. Do have a look on your Bloomberg terminal, and that's Tim Craighead of Bloomberg Intelligence. You can also read more on this on Business Week. Coming up, we have some economic data on deck. We'll get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. First up, we get PMI data, 9:45 and 10 a.m. Eastern. Then NATO leaders gather in Ankara, Turkey, Tuesday and Wednesday. And SpaceX enters the Nasdaq 100 on Tuesday. SK Hynix lists as a U.S. stock on Friday. Here's your macro picture as we head into the week. S&P futures pointed higher. Digesting the jobs data, no doubt. Still, we have the Bloomberg Dollar Index rebounding up about 0.2%, and we're down about 2 basis points across the board on the yield curve. That's it for Bloomberg Brief.